Welcome to Capital Pulse, the podcast where we sit down with fund managers, entrepreneurs, and business builders to unpack what it really takes to scale, the wins, the gaps, and the habits behind high performance. I'm Alice Chen, a multi-time founder and private equity fund manager who's seen the inside of both operational bottlenecks and breakthrough systems. After 15 years of building and exiting businesses, I've learned that growth often comes down to this: the ability to remove friction, unlock efficiency, and keep your edge as the game changes. This podcast is about discovering those edges. Each episode, you'll hear raw conversations with leaders who are building at scale, and together we'll explore how they are staying ahead in a world that's moving faster than ever.
Hmm.
Let's dive in. Welcome, Mike.
Hey, Alice, how are you? Great to see you.
Yeah, it's good to see you. I was a guest on your podcast, and now, thank you for coming onto our show. But for
Absolutely.
context, yeah, can you share a little bit about who you are and a snapshot of your firm or your fund right now? What you do today, and yeah, just tell us about your journey, how you got here.
Yeah, so the easiest way to say it is I'm a serial entrepreneur. Been self-employed for as long as I can remember, since my early 20s. I've been in the real estate space for the last 30 plus years. Started out on the residential side. Prior to that, I had a construction background and went in the apartment business in 2005. I've owned and operated over 8,000 multifamily units in several markets around the country. I've written a couple of books, and today I am a owner operator of several multifamily properties in the Southeast and the lower Midwest. And we raise private capital from individuals to share in the profits in those assets that we own and operate. And I own a couple of other businesses as well.
Okay, amazing. And I do believe you have a mastermind and you teach people underwriting and other skills necessary for running a multifamily,
Right.
say, business.
Yeah. I do have a coaching platform that I work with individuals either in a group setting or on a one-on-one basis for those who really want to excel.
Okay, amazing. So you mentioned that you started out in single family real estate, I believe, many, many years ago. Um, is real estate something that you have always wanted to do, like even since, you were a young child, or how did you land in real estate?
I didn't come from a family of entrepreneurs. I didn't come from a family that had real estate in their background. The closest thing to real estate was my parents building a custom home when I was very young. I remember that. But here's what I do remember. I was on family vacation. I was probably 8 or 9 years old. We were at a resort. I remember sitting on the edge of the pool, and I was asking my dad at the time about the rooms around the pool. And he told me in his infinite wisdom that people come there, they stay there, and they pay the owner money. And I remember saying at that time, I want to be the owner. So way back when I was 8 or 9 years old, I was already thinking about how to own real estate and get paid money, from tenants and people staying in short-term rentals and things like that. But it was many years later that I went into real estate.
Okay, amazing. So, yeah, so talk to us a little bit about your real estate journey then. So, did you like when did that start? Like, was it right after school? How did you get started and how did you sort of lock in on the multifamily asset class?
Yeah, great question, Alice. So I had a general contracting business. I was building room additions, and we were building about 25 a year. And, as an entrepreneur, you do everything. You hire people, you fire people, you go on bids, you do the marketing, you do the bookkeeping. I was doing all that, and I was still in the field banging nails, and I just burned out. I got tired of it. And, I had somebody knocking on my door to buy my company and was fortunate enough to sell my company. Thought I would take some time off and wound up going and buying two duplexes or two flats, we called them in the Chicago market, and rehab those. And along the way, I had met a real estate agent that was extremely successful. Decided that, after talking with him, that I wanted to go into the real estate business. So I went and he taught me his strategy and his philosophy. And I followed that strategy and I followed that philosophy. They always say if you want to be successful, go to successful people and learn from them. And I went to him and learned. And my first 9 months in the residential business, I sold 78 houses. I went on to build a team selling about 120, 125 houses per year and did that consecutively for about 13 years. 2005, and mind you, when I got in real estate, interest rates were still just coming out of double digits. So interest rates were high then. And I can always remember saying, boy, I wish they'd go to 3%. And, it only took 50 years to get there, um, but 2005, I went into the apartment business and we bought, I syndicated, and syndication is just a fancy word for saying we bring a group of people together to share in the profits. Some people bring their expertise in real estate. Some people bring their money, and you partner together and run and operate properties. I bought about 4,000 units in 5 markets. We had raised about $18 million at that time. And then I built a property management company that we managed 7,500 units in those markets that we own real estate in. And we built that company. It was a $100 million company. We built it in about 30 months.
Okay, amazing. And is that the company that you're continuing to build today, or has
No,
there
we
iteration?
did have some challenges along the way. 2008 rolled around, and I always tell people, when I tell my story, I say I made 5 mistakes. And the first one was I grew way too fast. I would never encourage anybody to go out and buy 4,000 multifamily units in 30 months, right? It's a lot of pressure and a lot of stress, and you have to keep your eye on the asset. And asset management is extremely important today. Deals are made and broken. But, my first mistake was we grew way too fast. And then I bought all that multifamily real estate at 85% loan to value.
Hmm.
And I was way over leveraged. 2008 rolled around. And because we grew too fast, because we were over leveraged, we started to come off the rails. And it was a very unstable situation. And I was also undercapitalized as a business owner. So I had 100 people working for me, wondering, as any entrepreneur does, how to make payroll week to week and how to keep your employees, satisfied. So, those were the 3 major mistakes that I made. The fourth being that I didn't pay attention to details. So, as I mentioned, asset management is very important. And, a decade ago, we did not pay attention to those details like that. And so we came off the rails, and 2008 rolled around and everything turned upside down.
Okay. Yeah, thank you for your, insights and wisdom. Um, so you mentioned that asset management is the key. So talk to us about exactly what that entails. Like, I don't come from a multifamily background, as my fund focuses on land development. So yeah, I'd love to understand exactly what you mean. And right now, I'm sure your current venture has also achieved quite a big scale. So what are some of the systems, or just what are some of the kind of learned lessons that you have now implemented into your current venture?
Yeah, so a while back, I sat down and I said, okay, what are the most important things that we need to look at on a weekly basis? I think that there's 3 levels of management. You have your on-site people, leasing agent, maintenance people that take care of the day-to-day operations. your leasing, your evictions, your collections, your maintenance, those issues. But then you have that center group, the property management company, which kind of oversees the on-site people. They take care of your bookkeeping and they take care of, overarching management tasks. But then there's asset management. And as an owner operator, I want to make sure that I'm paying attention to all the details. So I created a list of about 13 tasks that
Mm-hmm.
are part of the asset management function. And every week we are on the phone with our on-site people as well as their regional director for for the property management company. And we talk about every one of our assets. And I want to look at everything else from how many people are coming in to look at the property and where are they coming from? Are they walk-ins? Are they coming from the sign off a website, from an ad we run? I want to track that traffic. And then I want to know what our occupancy is and how many evictions do we have coming up? How many move-ins do we have happening and how many move-outs in the next 30, 60, 90 days? How many applications do I take in? How many move-ins happen as a result of those applications? I'm a big numbers guy, and I have to track those numbers because I see trends. You can manipulate and run your business off of the trends if you know how they're happening. Um, we also look at money in, money out, right? The profit and loss. We call it a T12 in the multifamily business. That's the trailing 12 months. And I always want to look and see what did we pay last month on this or 2 months ago, and what are we paying this month? And I want to look at those numbers and see, has our income gone up, has it gone down? And then we have to watch things like our net operating income and our DSCR, because there's loan covenants today that if you drop below a DSCR, that you're going to be out of loan covenants, and the bank will cause problems for you. So we look at all of that, and then we look at repairs. What major issues are going on? What needs to be done? How many make readies do we have ready for move-ins? So there's a number of things that we talk about on a weekly basis with our on-site staff and our management team to make sure that our properties are operational and running like they should be.
Okay. Yes, it sounds like a grand sort of orchestration of people and systems and different functionalities to make it all jive together perfectly and in the right direction. I'm curious because a lot of businesses are incorporating AI and automations into their workflows. Is that something that you have implemented for your properties? And you know, and if so, how so? Or if not, why not?
Yeah. So we have not incorporated anything completely into our business. We have looked at different options out there. I still think that's, it's like going and buying a car. Very few cars get sold online today, but you can buy a car online. But you still want to go buy that car when you get to touch it, feel it, taste it, smell it. Um, you so asset management is kind of the same thing. I want to be hands-on and make sure my property is running properly and have those communication, those conversations with the people that are running that. Um, so there's AI tools out there for that today. There's great AI tools out there for underwriting deals and taking deals for all the way from contract or offering memorandum right through to closing. And there's tools that you can use out there for that. We have chosen to still kind of stay old school with some of those things, underwriting and stress testing deals before we look to buy them, which is really important. I think that you still have to be hands-on from that aspect. Now, we do use a lot of AI for marketing and for promotions and for, I used ChatGPT today to create a legal document, and I think probably save several $100s, if not a few $1,000s, on an attorney bill. So.
Mm-hmm. Okay, great. And what are some other sort of pain points that you guys find that you experience today that you feel like possibly could be automated?
This is a people business. This business operates on people and because of relationships. I really believe that um, AI is only going to take a small chunk out of all of that,
Hmm.
although it is going to take a piece out of it. But you still have to have that personal relationship.
Yes.
Um, a passive investor is not going to invest in a piece of real estate that they don't get to talk to somebody about, right? Um, Even though reporting can be automated and we can send newsletters and we can send video distribution out to our investors, I think our investors still want to be able to talk to us and
Yes.
and hear from us verbally what's going on. And I think there's so many different aspects of the real estate investing space, as many asset classes, like you do land,
Hmm.
we do multifamily, we do industrial, but there's so many different asset types. And I think all of them have different, uh, you know, different points of view that you have to still have that personal interaction with.
Yes, yeah. Anything that requires sort of human touch and human judgment, I think, would be safe from being replaced by AI.
Yeah,
Yeah.
yeah, for sure.
Amazing. So, tell us more about your current focus today. Like what are you building? Are you looking to buy more multifamily deals or properties? Are you seeing good deals? They're in distress. What's the outlook right now for this market?
Yeah, so we've been underwriting recently again. We took quite a bit of time off from underwriting, but we have been looking at deals again in different markets. And I'm a market-driven investor, so the market has to make sense before we buy a piece of real estate, whether it's a 1970s product or a 2005 product. You have to make sure that the market makes sense. So we monitor right now about 40 submarkets around the country, and we've been looking at deals in some of those markets, and they're starting to make sense. Not completely, but they are starting to make sense. I think still some sellers are still trying to sell at prices that they need to get or that they would like to get, and kind of a dreamland, right? Still not completely getting there. Um, but I believe, and after being in the business 30 years, you see these cycles. And
Yeah.
and Alice, there's no geniuses in this business. There's only market cycles. And if you know where you're at in the market cycle, you can make money. You can make money when the market's up, when it's down, when there's a Republican in office or a Democrat in office, it makes no difference if you know how to find that cycle. And I firmly believe we're entering, if not already in, one of the greatest times in history to buy real estate, because we are definitely at the bottom and we're going to come out. And the thing that I've been telling people lately, Alice, is that if you wait until CNN says that the market is corrected and things are better, it's going to be too late. You're going to have missed the best part of the window. Now, these market cycles last 8 to 10 years. And there's no doubt that right now we're floating along the bottom of the end of the worst part of the cycle. So as you start to see, you know, I was just talking to somebody today and I said, boy, I wish the stock market had crashed already, because that's one of the last things. But,
Mm.
we're in a funny market. People, the foreclosure rate isn't as high as it's been, would typically be in this type of a market. And that's because a lot of people have those low interest rates. You've got unemployment that is at a low. But then you've got things like the GDP that the numbers are crazy and up. I think we're waiting for interest rates to come down.
Hmm.
which will be helpful. And I think we're waiting for a bit of a correction in the stock market. But, regardless, if either one of those things happens, it's still time to get in real estate because you're going to ride this cycle. And when you have the wind at your back, whether you're a passive investor, just along for the ride while you have a great operator that's running those projects, or you're the operator and you get a little bit of wind at your back, you're going to do very well in the coming months and years.
Okay, I'm perfect. So, are you syndicating, new opportunities right now, or do you have a new fund, or if our audience, would be interested in investing with you, co-investing with you, how would they find out about these opportunities?
Yeah, thanks for asking that. So we don't have a fund per se. We raise on individual deals. So I have a couple of different opportunities right now that we are raising capital on. One multifamily project that we own and we operate, we've owned for a while. We're finishing the capital raise on that. I have an industrial project that we're trying to bring to the market that we're raising capital on, and then a small debt fund where somebody could actually make 12% a year on their money, but they don't have any equity in the project. So where most of the other deals that we do stand alone, you get cash flow and equity along with some large tax incentives.
Okay, okay, thank you. So Mike, I would love to talk to you a little bit about your personal, high performance habits. So, one, you seem very studied, in the economic cycles and, real estate market, and, you seem very studied in that. So, how do you keep up with trend lines and news? I mean, it just sometimes seems like there's so much data to consume, right? Across social media, across news channels, across different ways of ingesting information. So what's your personal habits for keeping on top of everything?
Yeah, so that's a great question. So I I really believe in the philosophy that you should associate with people that are doing more than you and are smarter than you are. So I have about five or six people in my life that I'm very close to that operate at a much higher level than our group does or that I do. And so I get a lot of information on markets, market trends, where we're at in the cycle from these individuals. But I also, listen to two or three different economists that I really like. And on a monthly basis, I'll listen to those podcasts, when I'm at the gym or just driving in the car sometimes. I also read a couple of there's a couple of guys on LinkedIn that I really like their white papers that they put out, and they're putting things out, almost daily and weekly that I like to look into. And so I kind of take a lot of information and formulate my own. And Alice, like I said, I've been doing this over 30 years. I've I've watched a lot of this. I know some of the things to watch out for and what to look for, and kind of just, I take this data and kind of compile it myself.
Okay. Would you be willing to share your top podcast or the white paper LinkedIn authors that you follow?
Yeah, I follow, oh boy, I'm not going to be able to think of his last name. Um, First of all, The Economist from Marcus Millichap. John, and I can't think of John's last name right now. Um, John Chang, sorry, John Chang from Marcus Millichap. I really like him. The CEO of Walker Dunlop has really good data on a monthly basis. Um, then there's a couple of guys in the residential market. And, surprisingly or not, our commercial trends, whether it's multifamily, office, retail, is dictated by what happens in the retail market. The car industry, so many industries are dictated by what happens in the residential real estate market. So there's a couple of guys that I pay attention to on the residential side. that talk about those housing trends and where we're going. I was at an event just this past week where the CEO of Fannie Mae spoke, the second in command of Freddie spoke, along with you know Bruce Norris, who's an economist that has trended charts for 30 years, and the charts he produces shows you what's happening, where we're at, and history dictates itself. So if you look back to where we were in 1980, 1990, and where we're at today, you can see where those trends are happening.
Hmm. And what are they saying? Curious. What's kind of your
The-
general impression from all these,
So
different?
it's really funny. Alice, personally, for the last 2 years, I've been saying that we're not going to have a recession, that it's going to be a soft landing. It's going to not be as dramatic as a lot of people have said, and I've really stood by that for the last 2 years. And about 6 months ago, some of these economists started saying, "Oh, no recession. We're going to, be a soft landing." And I met John Chang. We had coffee together at an event about 4 months ago, and I said, John, I said, I have followed you for years, and it's funny because this time I had to disagree with what you said for a long time. And he said, I have to disagree with what I said too, because I didn't see some of the things that were happening in residential and interest rates and stock market that were keeping us from that deep crash. And so, you know, I, I,
So
listen, I'm
what is
not the,
Bell predicting at this
well,
point?
they're predicting that we're at the bottom and we're going to cycle out. That it's, that by second quarter of next year, we're going to see interest rates, 75 to 100 basis points lower than where they're at right now, which is going to catch up with the retail market. And, I think that there's a lot of pent up investor demand right now, and investors are looking for opportunities, but they're also a bit skittish because of some things that have happened over the last couple of years, but are seeing and starting to believe that we're coming out of this. So,
Okay. Yeah, that's great news. So yeah, so Mike, you must have other, habits or rituals that you apply, daily or weekly that has made you so successful today. Could you share some of these, hacks with our audience?
yeah. So, Alice, my morning routine is extremely important. And, years of kind of doing the same thing over and over again, you would start to think, wow, maybe I should change it up, but it works for me. And, I spend time in the morning, meditation or prayer, reading scripture, spending time with the Lord. I go to the gym, and then I come back and I get very intentional about my day. So I plan my day every day and what I'm going to, accomplish or get done. And I think by being intentional about your habits, like working out, like prayer time, like meditation, it helps you stay disciplined throughout the day to take care of the heavy lifting that needs to be done, and to continue to push the ball forward. We all have to-do lists. And I think that a lot of people think their day is fulfilled if they check a lot of things off their to-do list, but are they really the important things? Did you make the hard phone calls you needed to make? Did you talk to the people you needed to talk to? Or did you just, go to the post office and, you know, get the mail,
Yes.
right?
So less busy work, but be intentional about like maybe the three things, the highest impact things that you can do to move the needle.
100%. Yeah.
Yeah, it's amazing that it's funny because I've had quite a few podcast guests that's come on the show. I asked the same questions about perform high performance habits. Almost everybody, I think so far 100%, everyone meditates in the morning. So
Yeah.
I find that, really interesting. Um, That is wonderful, Mike. So I know that you mentor a lot of young entrepreneurs or young real estate operators as well as passive investors in real estate. So what would be the kind of, current cycle words of wisdom you would offer them today if someone wanted to get into real estate or, become a passive investor?
So, Alice, I love teaching people, right? And I love mentoring people. I've personally been coached for 25 years. I still have a coach in my life today. I think we all need that person that is going to be inspirational to you, hold you accountable, and help encourage you. Um, and in most of the time, it can't be somebody super close to you. Like it can't be my best friend, it can't be my significant other. It's got to be somebody who's at arm's length. Um, I love to teach people what they need to know, how to syndicate real estate and how to buy the right deal and how to underwrite. I love teaching all of that stuff. But here's what I really like, and is I like taking somebody who already knows all that and
Mm,
helping them scale their business, helping them strategize. I'm currently, and I only work with 5 people on a one-on-one basis. And currently I'm working with 2 very high level CEOs of major companies. One's a builder developer, and the other one is a self-storage operator. And it's been interesting to be able to give some insight to, because it's always easier for us to look at somebody else's business and be objective, right?
yes.
Because when you're in business, you're so like closed off on your own, and kind of have the blinders on, where I can be more objective. And it's been really interesting to see both of these individuals grow their business. And I have to tell a quick story if I can, real quick.
Of course.
So this CEO of a major company in Atlanta that I work with, builder developer, family owned business for years. He was the youngest of 3 boys that took over the company, and they put him in the hot seat. And he said, "Man, I need some help." So we set these goals at the beginning of the year back in January. And you know, we got through the first half of the year, and it was like, man, we didn't hit anything. I mean, we just did not hit any goals. But I'm going to tell you, in the last 6 weeks, it's like 4 or 5 of these things just all happened like this. And it's because we set up all of this strategy and these systems to
Mhm.
get them to this point where it was almost like these dominoes fell into place. You ever set dominoes up and push the
Yes.
one and they all fall?
Yeah.
It's exactly what happened. And it's just been amazing to watch. But that's what coaching does, and that's what I really love to do with helping people.
Okay, amazing. Yeah, and then thank you for using that story to illustrate, the difference between maybe a beginner entrepreneur versus a scale entrepreneur. I think it's a lot of the foundational stuff. So setting up systems, setting up SOPs, and just putting the puzzle pieces together. Uh,
Yeah.
yeah. Well, thank you so much, Mike, for your time. I feel like I gained so much talking to you, during this episode, and really appreciate you taking the time to talk to our audience and to continue to mentor, entrepreneurs that are coming after you. So thank you so much, Mike.
Yeah, thank you, Alice. And I'd love for people to reach out to me if they needed to or wanted to. And I love having, conversations with people. So you can find me anywhere on social media that you hang out, whether it's LinkedIn, Instagram, Facebook, TikTok, or you can directly reach out to me and just email me at mike@mikemorawski.com.
Okay. Thank you so much, Mike.
Thanks, Alice.